Traders at Axis Bank say they expect the Treasury Bills market to close the week on a quiet note as investors shift their attention to the bi-weekly retail secondary market intervention sales auction today. Well, let's get a wrap of this week's trading activities so far at the fixed income and FX market. Senator Audu, fixed income trader at Axis Bank, joins me to discuss it. Senator, thank you for joining us today. Let's get right to it. Bring us up to speed on market action this week. What have been the highlights that we should be talking about?
Quite an interesting one. On the fixed income side, the Treasury Bills space, we've seen one auction, the Audu auction conducted by the CBN on Thursday, that's yesterday. We saw the amount on offer at 30 billion, with 20 billion offered on the 355-day maturity, that's 24 January maturity. The CBN sold exactly what was on offer, 30 billion. This was despite the substantial subscription of 230 billion. We saw the stop rate maintained at 7% on the short end, at 8.5% on the medium tenor, and at 10.1% on the 355-day maturity. Opening the week, we saw a relatively bullish market. This is as a result of the liquid market that we've had this week. We saw liquidity levels at north of 500 billion in the money markets, and this drove the money market rates, such as the open repo rates and the overnight rate downwards. So we have the OPR at 0.75% and the overnight rate at 1%, closing the trading day yesterday. So we've seen these bullish waves particularly in the bullish market. We've seen interest across the curve, particularly across the special bills, which we have the May maturities, the February maturities, as well as the March and April maturities. So this has kept rates, despite these waves of the bullish sentiment, we've seen rates just inch downwards by an average of 10 basis points from where they opened during the week. On the FX side, we've seen the CBN maintain its interventions. There's a retail SMIS auction today, that's the secondary market intervention sales. We saw the CBN come in on Tuesday to conduct the Invisibles and SME auction. We saw the FPI intervention as well come in on Monday and Wednesday. And this has kept the NFX and INE rate stable at about 416 Naira, 887 kobo for the INE rate.
Okay, then let's talk about your forecast for next week. Are we expecting, what are your expectations around market liquidity? Are we expecting any mop-up from the CBN also?
Okay, so next week, we in the fixed income market, there will be an NTB auction conducted. The amount on offer is about 98 billion across the 91, 182, and 364-day maturities. Last week, we saw that auction conducted where we saw stop rates fall on the 91-day from 2.48 to 2.5, on the 182-day from 3.44 to 3.3, and on the 1 year from 5.5 to 5.399. So we expect the subscription to be substantial as well because the market has remained liquid. So except for any unforeseen liquidity event that could wipe out the substantial liquidity levels, we expect the downward trend to persist as well. So that's the key event we see happening next week. We also see the CBN maintaining its interventions, but there should be no retail auction next week because that auction is held bi-weekly, as once in 2 weeks.
I was going to ask you about your forecast for short to medium-term movement of rates on the yield curve for both the Treasury and the bonds market.
Okay, so for bonds, we've seen interest on the short end, particularly the 2026 bond, although this interest hasn't been substantial. So we saw rates on that instrument trade at about 11.2. So next week, we expect that interest to persist but at around that level because we've seen the bulls remain adamant at about 5 bips higher, so at about 11.25. So we expect that the bids and offers will be matched at some point next week. On the long end of the curve, that's the 2050s, we've seen those rates remain at about 13%. So next week as well, we don't see anything significantly changing in that space.